Nanyosha mikono yangu juu, naisifu nchi yangu maarufu. Nanyosha mikono yangu juu, naisifu nchi yangu maarufu. Hello, hello Tanzania. Hello, hello upendo wa kweli. Hello, hello Tanzania.
Any smart partnership type of interaction is being regulated through an anonymous way of doing so. To use Carl's anonymous, is a tacit understanding that when the drum in smart partnership movement beats, everybody is ready to start a smart partnership interaction, a dialogue. And those who are still coming, we will drum so that everybody knows they'll be embarrassed, it's too late. It happens very often. But those who go earlier, that's a separate issue. I don't know if there's good excuses, that's fine. Otherwise, from the beginning until the end, there is a smart partnership interaction, otherwise one cannot pick up issues. Welcome to the CPGM Smart Partners Hub. Smart partners are governors, central bank governors in the smart partnership movement, and one or two of the governors that we have the honor to have with us, around whom we got together, have been founders of this group since 1984, such as Governor of Mauritius was not governor when in 1984 we came about to exist, and there are 30 years since then. We have governors who are kind of founders, they are ministers of finance when smart partnership movement spread in Southern Africa, particularly in the context of leaders of a particular type who have been taking a hands-on interest to develop this type of interaction for think tanking purposes, to approach issues of the kind that one is aware of, but the kind of things that Carl just explained to us a bit before. So Governor Minister Majosi from Swaziland was part of what was called an interaction, a think tanking interaction that His Majesty, the King of Swaziland, introduced as following President, His Excellency President Museveni and Dr. Mahathir, who came up with this idea of a must for regular think tanking before dialogues. And His Majesty, before the dialogue in 2003 in Swaziland, when all of us went there, he wanted some more in-depth and provocative things that may be dealt with during the dialogue. And there was a think tank in His Majesty and a number of individuals here in London. Why in London? Not London matters. It's a space that matters. It's a space, a more kind of smart partnership type of space that some of the leaders with smart partners created since 1984. We wouldn't say it's neutral, but it's of a particular type. It's a smart space. And the tradition and modernity was the basis of that think tanking, and since then that was put on the map. And like this, before gatherings as once per year, or twice per year, or every other 2 years, and smart partnership movement as in a dialogue form, there are numerous think tankings since then. And most of them are at the hub, most of them are in association with a dialogue that is coming, like the governor said, this dialogue in South Africa, but which dialogue in South Africa is like a part 2 of Dar es Salaam. So Dar es Salaam in 2003, the Smart Partnership Dialogue in Dar es Salaam, together with the likely dialogue in South Africa will form one kind of preoccupation, which was raised by His Excellency President Kikwete, who had himself a think tanking interaction here at the hub before the dialogue took place. And there was this issue of leveraging technology, accelerating transformation, not only from the point of view of technology, but from a more systemic point of view, which is very difficult to define without getting into theoretical jargon. But in the last 4 or 5 years, what His Excellency President Kikwete observed, and the other colleagues of his, was that this issue of technology could be talked about in the context of operative, like National Bureau of Standards, which usually are looked at as technical, like central banks, because of this financial inclusion, which is one of the main reasons we're here, but because of technology itself, but because everybody's coming around this carrying forward national visions, which are not national development plans. So this was the kind of platform on which in the last 4 or 5 years a lot of evidence has been brought in that it's possible to emerge strategies and delivery of those strategies with a particular approach, with this smart partnership approach, which has values, ideas, deliveries of type based on networks and so on, and which, in relation to what in Dar es Salaam last year, Prof, we were trying all to counteract or to come up to reply to why nations fail. There was the idea how nations could succeed, the smart partnership way, through this strategy framework that evolved from real-time situation, real-time people, not simply in think tanks like Demos, but you are now part of that, so you are a real Carl. Now, today, we already started the financial inclusion, which is the main reason why the governors last year had a whole half a day during the Smart Partnership Dialogue in front, together with heads of government, vice presidents, chief executives, and all the rest of it. And it produced a lot of interest, of course, that session, and it was obviously a request that there should be more think tanks identifying specific issues and integrated with standards, with visions, etc. So today we have actually, besides the financial inclusion, for about an hour or so, as you can see in that outline of the dynamics that you have, we have about 2 hours of trying to signal, we already started, issues which are likely to be a preoccupation of further think tanking. But there are issues which are connected with signals that one hears, like the Bitcoin and so on, and they are grouped into 4 aspects on your outline on the piece of paper. But you could connect them however you wish. And we will end up with where we go from here and all the rest of it. So the first part will be Governor of Tanzania, Professor Dulo, and the second part will be led by Governor Mr. Binik, Manu, but of course with the joint involvement of the colleagues. And here we are then, please.
Well, thank you. I think Mihaela has already laid out exactly the approach that we're going to take. And maybe I'll say a few words by way of background, and then see whether we can focus really on the topic for this, which is to take stock of where we are, what progress we have made, since we last engaged on this, particularly in Dar es Salaam. Now, I think behind the whole initiative on the part of the central bank is the spirit of adaptive flexibility approaches. And that's why I think the conversation we had just as we were having lunch was exactly right. And it will be one of the tests for us to see how we can really invoke this spirit in order to really harness the good from the possibly bad and see how we can make headway with that. Now, when we met last, there are three dimensions of the ambition that we had actually adopted. We have set quite ambitious targets in our national visions to roll out access to affordable finance. And so it's not just a question of access, it's a question of affordability, and therefore it is both the reaching, as well as cost effectiveness in the delivery of that. Unfortunately, given a very low population density in the bulk of African countries, except a few like Mauritius and other much more tighter states, reaching is hampered by distance. And unfortunately, the traditional model of reaching through banking system with brick and mortar is too expensive to be able really to achieve the goal. And therefore, we adopted an approach of how we can make use of technology in order to bridge the gap of distance and offer that service cost effectively. So, you know, the arrival of mobile telephony offered us an excellent opportunity as a platform. And there were three dimensions of it. One was simply making payments. So the first use was just payment systems. So the M-Pesa and all the other types of mobile payment system actually became quite useful. But the second dimension then was also to make sure that we make connection to financial intermediaries, the banking systems, and other formal financial systems, in order to offer products that typically would be available through that, but using that platform. So the payment infrastructure became a platform for delivering these services. At the beginning, there was a lot of pushback from the banking system, thinking it is an alternative to banking services, but being offered without, the language was exactly the same, without supervision and therefore very unfair competition. Over time, that conversation has changed completely because banks now use that platform to do exactly the kind of business much more cost effectively by using the same agents that are being used for payment system. So this involved two types of partnerships. One was partnership between telcos and banks or other financial institutions on one hand, because otherwise you cannot deliver even the payment. You still have to open trust accounts in commercial banks. You don't just do that as a telco. The other partnership was between regulators on one side and the service providers, both on the telephony side and on the banking side. And you needed that pair or set of partnerships to be able really to achieve these results. So let me just very quickly give you just an example of how much we have been able to do so far using this approach on Tanzania side, and then my colleagues can also tell their part. You know, we just did a FinScope survey end of 2013, in December 2013. The previous one was done in 2009, and the results were remarkable. We had put a target which was considered ambitious of raising financial inclusion, formal, from 27%, which was then in 2009, to 50% in 5 years. When the survey was done, actually we have surpassed that target already by 2013. In 4 years, moving from 27.4 to 57.4%. And this, though, was done primarily because we were able to use this technological platform in terms of reaching out. Now, the second development, which was important, is the range of products then that can actually be delivered through that platform. There are two particular products that I wanted just to mention, which are a result of very smart thinking again. A telco and a bank have come together and developed or devised a system where one now can open actually bank accounts through agents that number virtually 110,000 against number of branches that actually are about 600. Number of bank branches are 600, but agents are about 110,000. Now, what happens in this case is that actually I've done it myself, and I'm a big user of this. I just go to my balances that I hold for payments, which is under M-Pesa, and then actually request to open an account with a bank called CBA, which is the other partner. Within 3 hours, wherever I am, I'm given feedback whether I can actually open that account or not. And in most cases, you can open that account within those 3 hours. It doesn't matter whether you are situated in a rural area, in a town, as long as you actually have access to that payment tool, the M-Pesa. So you can save on this, and you score points as you save, and then you can borrow. The one who's actually handling your savings and credit is the bank, the commercial bank. It's not the telco. The telco is purely a platform. So, you know, when I heard about the Bitcoin and the technology we're talking about, my initial thinking is really to go behind that technology and see whether that technology, particularly the cost effectiveness of that technology, can be exploited to be able to offer such services even more cost effective than, in any case, what I heard was clearly that you still need the mobile telephony to be party to that. So probably the partnership now might involve a few more, a few more. So I thought I would share with you on that. Let me conclude by just pointing out that since we met, we have thought it important within Africa to have actually a framework or a network for knowledge exchange. You know, some countries have started this earlier than others, So there is always scope for exchange in real practical terms of how these things have been done. And this is called AMPI as a network. And that network has already actually started this process of exchanging information, exchanging study visits, and also helping each other in terms of developing exactly the regulatory instruments that you need for ensuring safety. Now, that particular framework has identified three biggest challenges going forward with this, right? The first one is simply what's known as interoperability. Right now, each one of the telcos and one who is operating these systems operates their own. For you, let's say there's Vodacom, M-Pesa, and there's Airtel. If somebody sends me money, who is Vodacom and Airtel, I cannot simply add that balance to my account. I have to go via a cash point, so that I encash and then I buy Airtel money to add to my account. Now, what has happened, fortunately, already in Tanzania, 3 out of the 4 operators have decided to sign an agreement to become interoperable. So I don't have any more to go through a cash point in order to do this, which is a big step forward. Because there's always the issue of who was the pioneer, how do you capture the rents, of pioneering, aren't you giving others advantage, free lunch, so to speak, but they were able to do that. So this was one of the key challenges we have taken on board ourselves. The second is the range of financial products. The product I just described is called Empower, but the power is written in Swahili, but to mean exactly the same, right? Which is empowering, very low income households to be able to open savings accounts in a bank using this particular platform. But a third challenge, which I hope we'll take up in the next discussion, is that for those products, really to be able to reach the majority of the poor, we have always had a big constraint of standards. And this is in terms of know your customer, the KYC requirement. So we are going now to engage with standard setting bodies in order to adopt a proportional KYC, if you want, so that depending on the size of the account, the type of information you require would be proportionate to the risk that you would face. So part of the engagement that we're going to undertake as a group is actually to pursue that. So this is briefly what I wanted to share with you more broadly as far as the initiative is concerned, and then just to give an example as far as Tanzania is concerned.
AMPI network is, how did it come about, the AMPI network?
It came about mainly through AFI. This is the Alliance of Financial Inclusion, which was global, but there were very clear advantages that we as African countries had in terms, particularly, we are almost pioneers on the mobile payment system. So we wanted to really sort of harness that in terms of helping each other to move quickly so that all of us can move.
It's formed of central banks, including telcos.
That now includes central banks on the regulatory and the policy side, telcos, banks, are all part of that.
Of AMPI,
Yes.
the network.
Yes, are all part of the network.
Technologies, no?
Yeah, technologies too. Because it's just, I didn't mention one of the key challenges we had from AMPI is security.
But
Yeah.
maybe you want to
That's-
mention because
That's really one of the key. And there we can't really succeed because really the validity of that service is as long as people have trust and confidence in that particular instrument. And you can undermine it very easily by really pilfering the security systems of that. So we are now also including on board technologies so that we can work with them to give us, we as regulators too, the comfort that this system can work. And therefore that's one of the key again challenges that we have
we'll come
identified.
back to that
Yeah.
security on the
Yeah.
next governor.
Yes, I mean, let me begin by congratulating Tanzania on financial inclusion to have moved from 27% to 57% in 5 years.
In four.
In 4 years. It's
4
no
years.
small achievement. Well done. We were at 37% in 2009. We have an objective of achieving 50% by 2015. We are watching ourselves, hoping that we shall not disappoint ourselves. But you have the advantage, of course, of mobile banking, and you said that that was behind this phenomenal achievement. We have not been as successful in mobile banking as we have been in East Africa. But also I understand that mobile banking, some of the think tanks were young Tanzanians who actually, found the technology. And then, of course, with collaboratively, I don't know whether collaboratively, but again, it looked like Safaricom in Kenya. But I think the fact that you had that infrastructure, it helped. We are moving though. We've also felt that along with that, we needed, under our financial sector development plan, to also intensify financial literacy. With the hope that really, when we are getting our population towards financial inclusion, it must be something that helps them understand the value of money and how best they can use that value to improve their levels of life, which means that they should be able to have some degree of entrepreneurship, and from there be able to access finance to develop their entrepreneurship ideas. And so, therefore, financial literacy we feel is very important. In the process also, that it would help with getting our people to have a credit position that is respectable. So that when they borrow, they'll be able to work hard, perform on that borrowing, in that they will be in a position to pay back what they have borrowed and be able to continue to develop on their entrepreneurship and grow the businesses. So that's a process we're going into, and of course, also in terms of our demographies, we are not as perhaps in the same category as our colleagues in Tanzania and East Africa at large, in that we have a huge urban community which is disconnected with where it originally came from in the rural areas. So we basically do not have a system where people literally send money as regularly as our colleagues, some of our colleagues in East Africa. But that is not an excuse for improving on mobile banking. it is hugely important. And as the governor has said, to expect that you can expand on financial inclusion purely on brick and mortar banking is wishful thinking, because that is too costly. It will not be realized within the short period of time would like to achieve this. And in any case, if you get a branch way out in the rural areas, and some of those rural areas are sparsely populated, and that really is not economic to get that branch set up there.
Like in
But if we
Copper
can
Belt,
get other cheaper areas of mobile banking, agency banking, and these other processes, it's going to be quite useful. So we are working in this, but I'm encouraged that that Tanzania could be able to achieve this 57% will be among the top of African countries, I think. Because the last
Kenya
levels I was
60.
looking at of South Africa, where they were just around 50 or so. I mean, the last figures that I saw of financial inclusion. So well done.
yeah. But there was a communication received from a former member of Reserve Bank in South Africa, Professor Raymond Pearson, who wasn't very sure that the financial inclusion is, although there is a high percentage, that is as developed as in Tanzania
No.
and South Africa, and he wanted to make sure that I inform you about it.
Yeah.
But and similarly from Malaysia, actually,
Yeah.
for whatever reasons.
Yeah. I think that's very high. Of course,
Same in Namibia.
Mauritius is a different league. I mean, they're much higher than that.
Small
but-
Manu,
But
It's small league.
Manu, do you want to-
it's in
do you
a
want to-
different league. But the last figures I saw of South Africa, just around 50%
Uh-huh.
financial inclusion.
Manu,
Yeah, I think
financial-
Governor Gondwe provided an entry for me into the debate. I think our own approach to financial inclusion is slightly different. The nature of the problem, the size of the problem, the intractability of the problem is different. Partly because we are starting off with a inclusion rate of 80%. So what you're trying to achieve several years down the line, that's our starting point. And this 20% remaining is proving to be a very hard nut to crack for us. So we have been talking to the FinScope people for quite some time, and we said that perhaps there's some issues there that concern the Ministry of Finance. So talk to them first. So they continued talking to them for some time to try to understand what was at the root of this 20% still being unbanked. And then, after wasting two years talking to them, they came back to us. FinScope is led by in South Africa, based in
Yes,
South
yes,
Africa,
yes,
funded
yeah,
by
I know that.
DFID and others.
Yeah, yeah.
And they've done some very good work.
There's a lot of
In
statistics.
several countries, done very good
Statistics,
work.
yeah.
And that helps you to structure your strategy to target the excluded. So that's what we wanted to do as well.
You
So
were
after-
debating with them about statistics on what is
Absolutely.
employment, what's
Absolutely.
not. That
So,
was the only problem.
After 3 years of debate with them, now we've joined forces together with finance to launch the survey, which has been launched this year. Okay? Now, while that was happening, obviously the mobile payments technology reached our shores like anybody else's. But the scope for trying to sort of advance the inclusion agenda was very limited. Because we already have a very well-developed branch network. Some people say we are overbanked. And since they were not reaching this remaining 20%, we had at the back of our mind the feeling that perhaps these 20% are either illiterate or they are not worthwhile for banks to go and engage with them. And perhaps we should try to encourage new players to come in the banking space, to use new technology, like mobile technology and near-field communications and so on, to take banking to the people who are hard to reach. And this is exactly what two of the new players are doing. So we license new players who are not interested in opening branches. So they have only one particular bank, branch, head office, not even accessible to the public because it's in a tower building somewhere. So what driving them is technology. So they are doing house-to-house banking. So to make it easy, what we've done at the same time,
we authorized agency banking. Because before in our country, a bank was not allowed to have agents. You deal with the bank. Whether they were debt collectors or whatever, they couldn't. The bank had to do everything. So now we have allowed agency banking as well. So these two together, hopefully, will allow us to try to tackle this remaining 20% problem. And we tried to understand why the banks were not trying to reach to them. And two things happened there. Our banking sector has basically two different segments in it. There's a domestic banking segment and there's an offshore banking segment. And we think it would be unfair to try to impose a condition on the segment B, meaning the offshore banks, to help us with our inclusion agenda, which is a domestic problem. So we could not take a kind of broad approach applicable to the whole sector. So what we did is to try to change our approach to KYC regulations, and we've almost mandated a team far from the central bank. It's not a central bank directed team. We set up a task force on fees and charges and unfair terms in banking contracts. So it was set up by the central bank, but headed by people from outside, retired bankers, and many of them are retired bankers who worked in Mauritius, but they are foreigners. So these people led this team based on feedback from the public, and they've just produced a report. There are 100 different things, 100 steps that we're supposed to take to try to make banking more affordable, more inclusive, and more modern. So among the first things they proposed there is that we should have an account, which is a basic banking account, a no-frills account, which should be made available to every citizen without any minimum deposit level, because banks use that as a way to filter out some people and send them somewhere else. If all banks do it, these people don't go anywhere else. And we believe that a basic bank account is basically part of the basic human right of a citizen today. Because in a monetized economy, if you have no bank account, you are a non-person basically. So that basic bank account is one of the centerpieces of these 100 steps that we are proposing. Obviously the banks are up in arms, and they think that we are going for overkill, we are over-regulating, and Bankers Association is shrieking. But at the same time, one of the smaller banks went ahead, announced that they are opening this account for all citizens in the branches. Okay? So we managed to break ranks in the Banking Association. All right? So we feel that we should now lighten the KYC requirements as proposed in the report. In other words, the KYC requirement that we take, that the banking sector applies across the board to everybody, is really not called for small accounts. So we are putting conditions for a small account that it cannot be more than a particular level. If it goes above that, it has to go and meet the KYC requirements. But until it reaches there, you do not need to do all that. You waive the KYC thing so long as it's a Mauritian citizen. And Mauritian citizens, each and every one of them carries an identity card. And the card is changing now with biometric data on it. So we feel that it is more than enough for them to open a basic bank account. So that's happening. It's coming up. The biometric card is now being implemented. So we think all these come together. So technology is being leveraged in two different ways. Biometric card should be enough to open an account. Second, new communication technologies. Banks can use that to stimulate agency banking, house-to-house banking. Give you an example. Underbanked villages are those that are very small. There's no bank there. So instead of the bank opening a branch there, they send their team there, do house-to-house to open accounts for people who have no accounts. Okay? So that's, we hope that doing all this, we'll be able to tackle that remaining 20%. Because in a country of our size, I think you can probably cycle across in one day, right? Across and around the island. We cannot afford to have 20% people who are unserved by the banking sector.
So in other words, you also tackle this offshore.
The offshore one, we remove that completely because we don't want to saddle them with the task of domestic financial inclusion. But the offshore one, we have a different issue. We also have this payments problem in the region. So if you trade, say, between Mauritius and Tanzania, the settlement probably goes through New York or Hong Kong. So we feel that the costs are too high, too many intermediaries involved. So we wanted to try to reduce that cost of intermediation, and we are coming up with a national switch for the country, so that we don't have to pay SWIFT for domestic transactions or plastic cards, for example. So the central bank is spearheading that, and obviously the large banks that have invested in the network in Mauritius are objecting like mad. So we feel that we're coming up with this payment switch, and we're going to leverage that as part of our regional payment system. If you trade, say, with Malawi, we do not need to settle in dollars. We can settle in domestic currencies. And to do that, we have come up with this platform as part of the COMESA approach, which is called REPS, Regional Economic Payment Settlement System. And my central bank is the host institution. So we are entering into agreements with different central banks. And the central banks in turn must deal with the commercial banks to get them to use this platform. And their interest probably is not there because they make part of that fees that they collect in the process. So we offer a much more efficient platform without using other currencies. So we think there's a lot going for it. Now this is meant for COMESA member states. But we have also in Southern Africa, like Swaziland and ourselves, we are part of SADC.
Yeah.
So in SADC, there's also a payments initiative, which is called CIRES. I don't know what it stands for. CIRES, and basically started up as a payment initiative within the SACU region, but to be extended to non-SACU member states. So we have a large bilateral trade in South Africa. Again, it goes through dollars or whatever it is, settlements, and we feel we can settle directly through the CIRES. So we are joining that as well, very soon, to be able to reduce the cost of transacting in the region. Okay?
Yeah, actually,
So-
when we went to Dar es Salaam for the dialogue, we had colleagues from Botswana who went to the hall in the wall, and they had, from their own account, which was in Pura, they had euro money. And the other way around. So we felt very envious that we can't do the same thing here. But yeah,
We have set up one also for East Africa. It's called the East African Payment System. Multi-currency, we use only our currency, not that currency.
Very good. So these are ways of trying to reduce the cost of transacting with banks, the cost of intermediation, and financial inclusion is partly of that, so that intermediation doesn't get the bulk.
maybe we
the
talk
profits.
after.
So that's
Minister.
basically what I wanted to say on financial inclusion.
But there are security and nature of technology and a number of things, interoperability that probably.
Thanks.
stop the economy.
My comment would
It's
just
like
to appreciate, the extent to which Tanzania, Mauritius have won with the issue of financial inclusion. A survey was being carried out in Swaziland. I think they're almost ready to share the results on financial inclusion, yes. The preliminaries are indicating that there's quite a lot of usage by Swazis. Of course, even if you go back, we had underestimated the uptake of the cell phones themselves. I think the company that came in had the advantage of understating how many people will be having or so many, but virtually every homestead now, there's one or two cell phones. And I think what also becomes critical is once you have this mobile money and other things, what are the other things that you can pay for? Right now, you are able to pay for your utilities, your water, your electricity, and other stuff. But I think the more we increase there, then the more people are getting into the money economy of the country. I hope we can look beyond that. Dr. Smith, I was just challenging. There's a study being carried out under a consultant from African Development Bank just before I came for these meetings. And I was saying to him, one of the challenges that we have in agriculture is how we can entice the youth to actively participate in agriculture. One of the things that I'm thinking, even without knowing what they can do, is our kids are on the phones all the time. Twitter, whatever they are doing, what kind of a technology do you want to have in place so that our youth can have interest in agriculture? our youth can do something that is more productive as we need that as well. So I think this is very critical. I always try to tie this financial inclusion with participatory growth. You really want virtually all the citizens of the country to participate in developing and this is one of the prerequisites of financial inclusion. You probably need more other things as well in order for them to actually participate. Otherwise, I appreciate the role that we now are able to sit somewhere through internet banking and do so many transactions with different, banks, different people. It's a technology that has come in. We really need to harness it and let it work better for ourselves, and the potential is there.
But so there is a central bank in Swaziland which has a lead into financial inclusion in Swaziland, right?
The central bank, yes.
Yeah.
We're working with the Minister of Finance.
But is the Minister of Finance too?
Yes, we have.
What does the Minister of Finance do as different from what the central bank does in relation to financial inclusion?
In the Minister of Finance, we set up an office microfinance unit which is looking at these issues of financial inclusion, working with us as central bank and working with other institutions of what do we need to do. And I've always been one of those that was complaining about bank charges and other stuff and say, you are chasing people away from the banks.
As a minister?
Sorry?
When you were minister?
Yes, when I was minister, I've always grumbled about that. But I like the style of Mauritius where they've set up a task team to say, let's investigate what is actually happening out there, and then you want to make it affordable, you want to make it accessible. How do you actually do that? What are some of the things that you're coming across?
Thank you. Deputy?
The governor talked about the way we have increased inclusion, and that channels clearly to poverty reduction, because having increasing access in financial services leads to other economic activity to happen in the rural areas. And what we are thinking is working through what we have, the financial inclusion framework. I think you've heard Tanzania launched it in December 2013, which was also graced by Queen Maxima. Yeah. So that one, the Bank of Tanzania takes a lead, and it is a framework that takes into consideration and has taken on board all stakeholders, from the regulators to the policymakers to the telecoms and the private sector. So through our lead, we have a framework which has a structure, and through that structure we are able to reach all parts and all the main stakeholders within the framework. And also the basic pillars for the frameworks talks about the proximity, which talks about the access part of it. So access is clearly one of the pillars on the frameworks. And we have the platforms. So here we have the payment system, we have the telecoms taking part. We also look at robust information and easy client onboarding. So here we have the Credit Reference Bureau, which checks into how to facilitate and reduce the risk in terms of the part for borrowing. And we look at for information to inform the consumers, and that is also done through, I think, when we talked about literacy campaigns and the like. So this also takes part there. And also consumer protection. With we look at the what the governor also talked about, the standard, the bodies for standards, because at that part now, what we want to see is kind of tiered KYC. I think it is also mentioned. So the tiered KYC will produce those that have just started. In fact, we do have levels, even in terms of the governor said if you have your account, then you are being you will produce within 3 hours. You'll know you have an account. But also those accounts are also tiered. You need to just go and verify, then you are on a higher tier.
Yeah.
So they are, but we want that to be through the standard setting bodies, so that we have the risk assessment within the country, and we also have that kind of KYCs.
We've been told last year that in Zambia, and probably there are quite a lot of women encouraged to get into financial inclusion, either because of agriculture or tradition. Governor in Swaziland, there's a lot of traditional kind of interest in the financial inclusion. I mean, Queen Mother has a mobile, right? Since about a few years ago, under her traditional. And is she doing M-Pesa banking? Do you know?
I wouldn't know.
Her Majesty can hear. She may come here to ask what is available for her. But, so in Tanzania, kind of the question of women or youngsters or old, elderly, or who is more interested out of those 57%, or who are more kind of? Is there some trend? Or it's just an encouragement that is being made at the point of time for women to get more involved?
It'll give us the
Can it-
data, because I think the survey
There is
did
a
make a
survey.
distinction.
Uh-huh.
Adult population, virtually 91% of the adult
Exactly.
population have accounts. And this is more for men and women. So that's
So is
more
it-
is covering virtually everyone in terms of gender. But maybe for the youth and the others, I don't know whether Kennedy may have additional
The
information.
29ers.
Thank you, Governor. It's exactly like that. 91% is the current statistics, which shows the active subscriber. 51% are active, and the population of adults. And out of the 91% which are active, it goes with the demography of the country. But a little bit skewed on the other way around. We have more women than men, but in terms of access to the service, it's because it's also an economic activity. It ranges between 49 and 51%. So you have 51 for men and 49 for women in terms of access.
Very interesting.
And in terms of use of technology, it's more skewed to the youth because they're the ones that are actually using the services as opposed to other adults. And the statistics range from age 16 and above. So we have data for 16 years old up to 16 years and above, and then you have 18 and above. And in terms of rural-urban, the urban areas are more centers to the rural population, but in terms of usage, increased usage is also being noted in terms of agriculture financing for women and small and medium enterprises, because they're now also having access to the service to be able to either save through the small savings groups that were under microfinance institutions and saving groups. They're using the technology.
Now, we talked about the nature. We'll come back to this, but the nature. So that's why I wanted to bring. I wanted to bring you in. I wanted to bring you the nature of technology, because we say technology, but could you tell us about the nature of technology we're talking about? Scott is Chief Executive of Bureau of Standards and in Britain, but the main asset is that he is an engineer and a technologist, and tried to bring us to understand that standards are technology, and emerging technologies require new emerging standards, and they are very relevant to interoperability and everything you mentioned now, security and so on.
Thank you, Michaela. Well, good afternoon, everyone. My name is Scott Steedman. I'm Director of Standards at BSI, so I'm responsible for the UK National Standards Body, and I know many of your standards bodies as well. Very interested and very impressed with the amazing work that's going on in this sector. We've put a lot of effort in the UK in trying to understand the role of the National Standards Body in this sector. And we've done independent research, and we've made a lot of progress in introducing the concept of voluntary standards to support the delivery of government policy in banking. So we've picked up a number of areas already this afternoon, which are in a sense obvious. Interoperability of data, security, technology, the relationship between the telcos and the central bank, the relationship between the technology providers, the retail banks, central banks, and the role of consumers. And the national standards bodies should, and I would encourage you to have that dialogue with your standards body, and if we can assist in that, I would be delighted and honoured to assist in that process, to try and allow them to help you balance in an independent way the government policy objective, the industry expectation, telcos or banks, and the consumer expectations as they become more aware of the products. One of the areas that we have looked at recently is simple financial products. So the idea that, as we pointed out earlier, that consumers who are new to this can have some measure of assurance that this is a product which has met a certain standard, and that they can compare from one provider to another. Because otherwise it's very easy to confuse people who are not familiar. And therefore this idea of a basic bank account is brilliant, but if it's provided by several banks, the same, how do you make sure they're the same? How can people compare? So there's a very important role in using standards in that area. And of course, a lot of international standards, we have that report which you can download, very interesting piece of research. Very important area also around behaviour of people in the sector. So the use of standards to encourage better behaviour in the telcos, in the banks, in their relationships, in what they commit to help you with your policy, and in the products themselves. So there are many areas there in which the standards body and its relationship with the international standards community can assist in the multinational trading. So by using international standards from an early stage, or working in an international, multilateral way, you will accelerate the future development of products and services in this sector and allow for growth and, as we were just talking, travel and import, export and so on. So I think there's a huge opportunity here.
But I'm just talking about, for instance, your interaction as BSI with the governor here, Mark Carney. I mean, one wouldn't immediately think, isn't it, that you would interact with the chief executive of Bureau of Standards, would you? I mean, you might want to, but it's not an immediate need, because these are more unconventional or hidden attractions.
It's not unconventional, it's just that historically people have thought of standards as something to do with bottled water. But they don't realise that actually it's to do with quality of service and aspirational performance improvement. And it's an alternative to regulation. A meeting I had in 15 minutes in the department is precisely about alternatives to regulation. So rather than the banks complaining they are over-regulated, you can use voluntary standards to say, okay, here we are, you try this, and if that doesn't work, then we'll regulate you. So you can use voluntary standards to achieve levels of performance that are market-driven and are managed in an independent way, independent of the bank and the government and the consumer, and are managed over time through those committees. So I would be honoured and privileged to work with any of you, if you wish, to have a separate discussion in more detail, specifically on the role of standards in financial services. It would be privileged, but it would be very enjoyable. And
one other aspect, probably connected to this if you want to raise it, or do you want to connect it to the second part?
You're looking at me?
Yeah, I'm looking at you, Mark.
I'm not. I don't.
You don't have any
raise it
at this point of time.
No, I don't.
Connect to what you.
I've been particularly interested in the discussion about inclusion in particular. And what I'm trying to gather, more from my own knowledge than anybody else's probably, is we've got different levels of inclusion in these different countries, and some have been particularly successful and only have a small percentage of the unincluded or non-included, whereas others have a much larger way to go. What I'm interested in is what the key barriers to including the remainder are. Is it the same problems that occur in each country, or are they other fundamental differences or fundamental different barriers to including that last percentage, if you like?
there are very different circumstances. So I'll just take the example of Mauritius and Tanzania, just to know the difference we are talking about. Tanzania is 960,000 square kilometers, population distributed everywhere. In most villages, you can't get the critical threshold to open a branch that would actually make sense, right? And distance and uneconomical size is the biggest barrier, and you have got to bridge that gap. Technology is what is helping us to bridge that part of the gap. That might not be as applicable in the case of Mauritius, given the description Governor Binika actually already gave, and therefore his 20%, you have got to look at other drivers for it, yeah? And that's why they were working exactly on this. This doesn't mean that we don't need also to look at these other things. We will, but my hunch is we can get to 75% by bridging the biggest barrier, which is distance and access.
I'm lucky enough to have visited all the countries I think represented here today, so I'm familiar with the sort of geographical and distance.
But I must correct the geography here. Mauritius is actually bigger than Tanzania.
Because
We have 2 million square kilometers. But we tend to focus on 2,000 square kilometers.
You don't have many people living in the room.
Sharks.
Or many banks, no.
Let him try to get service to the fish.
Yes.
As a matter of fact, Governor, I must say, we've been very lucky. Many years ago, when Manu was not governor, and he was requested to put together this, articulate in 3 months, the Vision 2020 of Mauritius. And that was the main asset of articulating that vision. The fact that you didn't look at, but you look at marine estate, including the. So there are actually ways of leveraging that. When probably one could think of nature or technology related to marine, but that we can put on the agenda. There are many other countries like Seychelles, or even yourself. You have quite a large marine.
We didn't count the marine
yet.
part.
The marine estate.
I only counted land mass.
Okay, the marine estate one. And,
So we are land
so
lovers.
that will take us quite easily to the second part, and probably will drive some conclusion about some of the financial inclusion next issue.